Hello, really Prima people are having an amazing blessed day. First things first, we're looking at NQ here. Not NQ, sorry, NAS 100. I ain't gonna be looking at NQ this whole year. I'll look at NQ heading into next year. So for now, I'm trying to keep my finger off the trigger. Just keeping my pen sharp and tape reading as usual. Nothing dramatic. So first thing, my eye just jumps at the sell side liquidity right here. So we have sell side swing low, potential swing low, which I don't think will form, and we have fair value here. Personally, I would love this fair value to not get traded into in any shape or form. I would love price to at least trade below sell side liquidity, which is just below here, before even targeting fair value. But we could see it retrace, trade into fair value before we see price race lower. Honestly, I do think we're still going to make all-time highs again, and everything that's happening now is nothing but a retracement for higher prices. First place where I am looking for longs is right here. So when we get here on lower time frames, I'm going to be smacking longs and I'm going to be looking for longs, and I don't think these lows will get tagged. So anyways, since that's the case, we can go to a 15-minute chart. And on a 15-minute chart, what you currently notice is we are currently within a range, most potentially a dealing range. We have a swing high right here, which traded into a small fair value, and we have a potential swing low, which is forming with only 4 minutes left on the clock. So now what we're looking for is equilibrium. This is where we are now. All price runs from fair value, or that originate and are sustained, begin at equilibrium, meaning we're going to consolidate, and once 50% is touched, or almost said distributed, crazy. But once we touch 50% of that range in and of itself, PD arrays above between 50% and 25 and 75% become areas for potential shorts. If we do go to 75%, it's a bit too high. I want to see sensitivity at the 50% level. I want you to notice all the body closes. I want all the body closes to below 50%, even though that's currently printing now. So when we go into a 1-minute chart, it becomes easier for us to spot, okay, we know the range, we know the target, which is the bias. We're looking for sell side liquidity. Above 50%, where's the nearest form of liquidity? We have liquidity right above here. So I'm going to turtle soup short here. All right, short. Okay, let me just sell right there. And I'm going to look to see if I can, there we go, I'm in short right there. So now what are we? We're in a dealing range. And within this dealing range, we've just retraced 50% and more. Personally, when I'm looking at such exam, my students will love this. So now, what am I looking for? Risk parameters. I'm looking for a 20 handle TP. Nothing more, nothing less. Could care less about any. So 20 handles is below our initial range that we're looking at. So now that I know the range, we do have fair value here, which we could see trade into. But I would love this to play breakaway and continue to see heavy prices. So now, obviously, I would have a 20 handle stop and a 20 handle TP. Let's say if I didn't have that, where would my stop be today? Based on my experience, my stop would just be, I wouldn't lie to you, to be as soon as this candlestick closes, my stop loss will be above that high. But since that's not the case, my stop loss will be right here, because we do have fair value there, which we could trade into, and it's okay. But what I'm basically trying to do today is, this is a breaker here. We want it to fail right there. So we touched it once, and we touched fair value. Personally, I don't want that to remain strong. I want that to remain heavy. There's no need for that though, because I don't need that model in my chart. So now what I'm doing is, I'm not going to execute if we're below 50%. I'm only going to execute and look for PD rays above 50%. And all price runs begin once equilibrium has been met. So we have the range, we've traded back into equilibrium, and once we've reached equilibrium, we're delivering to points of fair value. And the most recent point of fair value is just above these swing highs, which is liquidity. Liquidity is a form of value, meaning there's people who are putting their orders or their stop loss or their TPs or whatever just above the swing high. So as soon as we trade up into it, what I'm doing is I'm pairing my orders, meaning I'm going short relative to all the people that have limit orders long, because this is what you can do in trading. You can put a limit order here, right? A limit order to buy, those breakout traders. And sorry, I'm not connected to anything, but you can put a limit order for buying here. So now what it does is it will trigger the buy order, but as soon as it triggers the buy order, you're expecting more momentum going higher. That's not me. So as soon as it does that and trades into fair value into points of liquidity relative to the range I'm studying, then that means fair value has been met for me. And people who are looking for breakouts for it to continue spooling higher, they're getting more riled up, they're getting more excited when they see these piece of price actions. But for me, this is moments for me to go short. And what are they going to do? They're going to add their longs, they're going to add their longs, they're going to add their longs, and they're waiting for that one candlestick to spool up and obviously deliver to either this buy side that's resting above there or whatever points of liquidity they are looking to target. And they're usually looking for breakouts relative to the opposite of the model I'm trading, which is I fade breakouts. But anyways, we'll see if this will play out or if this beautiful short will play out. But the most important lesson here is not whether the short plays out or not. Just keep an eye on this, because my eye is deadlocked on this breaker. You see that swing low there? Didn't want to see it, but it printed me the less. So now, what I'm looking for in terms of executing or trading, I'm looking for points in which I know, not know, but I'm looking for points where I've identified the bias, whether it's heaviness or lightness in the financial market, meaning the market is more willing to drive higher relative to it wanting to drive lower. And if I found my bias, and I've seen when I'm on an hour chart, 15-minute chart, whatever, only Jesus knows, and all the signs that those candlesticks are giving me is that we are chasing swing lows, swing lows, swing lows, swing lows, swing lows. Every single pop high is nothing but a retracement till a certain objective is met. Personally, I think this is the objective. Once this objective is met, everything going high is nothing but a retracement, every single one. And I'm looking for, when I have identified the range fully, when I've identified what range we're in, wherever I'm going in short, the likelihood of it continuing the price run that is already in session is likely. And if I can't identify that, and I can't find that model, I can't find that sequential delivery, I can't find that thing, and look at it on a 15-second chart. I'm going to see if we can pyramid as well. So we've already done our function. We've traded above buy side liquidity. This is our shift in market structure on a 50-second chart, on a 15-second chart. So on a 15-second chart, once we trade above this low and have a body close, every single mode of fair value is going to offer me nothing but lower prices. And it's very important for you to try your level best to understand what dealing range you're in. Because when you identify the dealing range, the right range, it becomes easy for you to get in sync, because all you're looking for is liquidity and fair value, nothing more. So we have closed above this, below this. And every single retracement is nothing but an opportunity for us to go short. You can even go short on the same level I marked, which will be a beautiful one. And all we're doing is we're targeting this. Well, and the thing is, we're not in this to make money in any shape, way, or form. Of course, we're in trading to make money, but we're not in this study session for us to know whether we're right or wrong, whether we can make money, how much we can make, or whether we can get the lowest form of risk. No. What we're trying to find out is, can we get in sync with the current bias? And once we've identified the bias, is it easy for us as executors to, my eye is jumping right here. See this? Trading into that. So that's kind of what keeps sending these nice pop. So what have we done here? We've traded into another fair value there. That's a nice short. So this we just mark it in blue, and then once it plays inversion, this will be a perfect place to add short. Even here as well, this time, beautiful place to add shorts right there as soon as that candlestick printed. But what we're doing here is we're trying to see, can we get in sync with the financial market? And if we're out of sync, how can we identify points of invalidation? And once you've found those points of invalidation, how can you best navigate through them? How can you best overcome them? I know the market is fast, blah, blah, blah. But it was a beautiful sell-off. It was a bit quick. I wonder if you caught it. But the goal of this is to not be right or to be wrong. Is, can you identify equilibrium? Target has been met. We've delivered a beautiful 20 handle short, almost zero drawdown. This is fire. I'm sorry. Oh my goodness. I don't think I should post this video. What do you guys think? But anyway, it's not the point. So now, the goal of this exercise is, can you identify ranges? Can you identify points of invalidation, points in which you can execute short or long relative to what's currently equivalent within the financial market? Because when we were here on a 1 minute chart, uh, it's I don't know. It's what type of question is that? Um, it's hilarious. It is not a matter of are you right or are you wrong. The matter is, can you identify dealing ranges? And when your range, whether it's a dealing range or not, doesn't matter. Is your range right? And what model are you going to use once you've traded either above buy side or below sell side or whatever? But and the model is already delivered, so everything that's happening now is irrelevant to me. As soon as we got our 20 handles, I was up and done. But you're looking for moments in time in which you can find these fair values above 50% or at equilibrium, because at equilibrium, after a range is set, that's when the expansion, that's when the beautiful sell-off happens. If you want a 5 second, you're going to look amazing, but it's a bit too fast on a 5 second. But on a 15 second, it looks a lot more cleaner. But that is the basic lesson. I'll try, because this is live and my brain is working at freaking 60 miles an hour, and I'm trying to talk about this while this is happening, that. So I might have to pause the recording, share the video, and then after and only after can I share the conceptual idea. But it's beautiful to watch in lifetime. It's beautiful to experience. It's beautiful to have no fear, no anxiety, no if this then that, or I can't trust myself. This could be a beautiful turtle soup, but my brain is working on overload, so I'd rather not. And these relatively guys look even juicy. But we have traded back into fair value. Another point of fair value, even when you go on a 1 minute, it's best to find out these are points of fair value, and we're still heavy and looking for sell side. So once that range is set, again, we can remove all these, doesn't matter, but it's a drill. So what do we have here? We have buy side liquidity, which is tagged right above here, which is where we went short, right? We have sell side, which was tagged right below here, which we went, which we were targeting basically. Then now what do? We grab a fib. Sadly, the thing is already delivered, by the way. But when I was watching it on a 15 second chart, what have we done? We have delivered from there all the way down to here. Then what have we done? We've traded back into equilibrium. What is at equilibrium? Fair value. What is above equilibrium? Buy side liquidity. So we tag that same conceptual idea, and we're seeing it race lower to a different potential profit objective. And once that profit objective is met, then that range you're in again becomes another range, and then until there's that shift in market structure where everything changes and you begin to see higher prices. But I am having the time of my life, and I'm not going to stop speaking until I post this video. But let me pause this video, and then we'll have a chat in the private section, and then maybe I can share that recording of the review as well if you guys would like. But other than that, I'm basically calling it a day. It was beautiful execution. Less than 13 minutes, but I pray you guys have an amazing blessed day. I will drop the review video hopefully, and then we'll kind of take it from there.